Kevin Mahn's with us, President, Chief Investment Officer at Hennian and Walsh Asset Management. Thank you so much for being here. So when
pleasure.
you see GDP basically coming in and the expansion at 1.6% when the estimates were 2.4%, coupled with the consumer prices, that part is the inflationary part of this print, up 3.4%. The prior was 1.8. Things are going in the wrong direction. It's showing the stickiness of inflation. Is that why we're selling off? Why do you think we're selling off here?
Yeah, Nicole, as you may recall, the last time I was on your show, I suggested that I believe that the market's gotten a little ahead of themselves in 2024, pricing in the perfect execution of a soft landing by the Federal Reserve. I believe then, and I still believe now, that we haven't reached that point just yet, and today's data only confirms that. We learned that GDP only grew, as you suggested, by 1.6% in the first quarter. The GDP now estimate, the most recent one from the Atlanta Fed, was looking at 2.7%, significantly slower than where we were at the end of last year. And then we see the PCE deflator coming a little hotter than expected. So all this tells me that we're not there just yet, and the Fed is really trying to thread the needle with respect to trying to slow the economy, not push us into a recession, but also bring inflation back closer to their 2% target over time.
Right, understood. So what does this mean for rates? I mean, we've been in this higher for longer environment. There was even talk of a rate hike. You do have this slower economy, though. It's a very, they have to be careful with that because they want to tame inflation, but also, not stifle growth and cause a recession. Tell me a little bit about what you think the Fed is thinking here.
Yeah, absolutely.
Because the rates, what's going to happen with rates?
Yeah, and there is a blueprint for what could go wrong here. Back in the mid-1970s, Arthur Burns started cutting interest rates prior to inflation coming down to 2%. That brought back double-digit inflation. Then Paul Volcker stepped in and actually raised short-term interest rates at 20%, stamped out inflation, but also brought on a recession.
Right.
I believe the Fed is still adamant that they do want to cut interest rates, prevent their own forecasted economic slowdown from going into a recession. But the stickiness of this inflation is pushing that timeline back further and further. Could they still get 3 interest rate cuts in this year? I guess they could, but they're going to have to remain data dependent. We're certainly not going to see any talk of any interest rate activity prior to the end of July.
Okay, so, May's off the table, June's off the table. Then there's July and September and so on. We did get some earnings. We see Meta down. We see Southwest down. IBM and Caterpillar have been weighing on the Dow 30, for example. Some thoughts on earnings here?
Yeah, as it stands right now, according to FactSet, the blended earnings growth rate for the S&P 500 is only 0.5% for the first quarter. However, the technology sector, which has been leading the markets over the past 15 months, is expected to grow earnings by 20% year over year. Communication services, prior to Meta reporting, was expected to also grow by 20%.
Right.
So we really need technology to come through. I'm very interested in seeing what Microsoft reports later today, and also ultimately what NVIDIA reports in May.
I mean, are you surprised to see Meta down double digits today? Everybody had been saying that this one was the most impressive of the bunch and so on and so forth. There had been a lot of positive talk.
Yeah, it's hard for me to call them Meta. They're still Facebook to me. But the stock was up 33% year to date prior to the earnings call. They did beat on earnings. They did beat on revenues. But they forecasted lower revenue growth than the analysts were expecting. But I believe for the right reason. They're going to continue to invest in AI, building out their AI infrastructure. And I think we're going to hear that from a lot of the earnings call. A lot of CapEx spending as it relates to AI, specifically as it relates to infrastructure spending in the world of data centers.
When we talk about the Mag 7, in fact, you do have Microsoft as a name in that particular group that you like.
I do.
Why is that?
I ultimately think Microsoft is going to be one of the winners, if not the biggest winner of the AI race. They were very early on to the AI game with their strategic investment in OpenAI and ChatGPT. They also continue to invest to expand their offering, whether it's Copilot, whether it's Azure. We learned earlier last week that they are actually investing $2.9 billion to build their own data centers in Japan by the end of 2025. They have the money to spend, they have the expertise, and they have the commitment to stay in the AI race and ultimately be one of the winners.
And then you also have, other than NVIDIA, which you've been watching, I guess that's not your pick, but Taiwan Semi, is that the pick?
Yeah, I don't dislike NVIDIA. We hold them as well, but everyone forgets to discuss Taiwan Semiconductor, and they actually have a 60% 10% market share in the world's dedicated chip foundry. They also recently received a grant from the Biden administration as part of the Chips and Science Act because of their Arizona subsidiary. So there are more ways to play the IA race than just NVIDIA. Taiwan Semiconductor is an example, Microsoft is an example, Digital Realty in the data center space is an example, and how about Vertiv Holdings? We saw what they announced yesterday with respect to earnings, beating on revenues, beating on forward-looking revenue estimates. Very unique play in the AI world, Nicole, because they provide the electricity, the infrastructure, and the cooling solutions to those all-important data centers.
So, did the market get ahead of itself? And on pullback days like today, do you see opportunity? Is it more a stock picker's market? So like Microsoft is down, do you buy Microsoft today? The S&P is below 5,000, do you buy the S&P today?
Yes, the market got ahead of itself, and yes, it is a stock picker's market. In fact, I thought that the total growth for the S&P 500 for 2024 was already hit during the first quarter. So these types of pullbacks aren't to be unexpected, and I think we'll see more short-term bouts of volatility until we've seen more signs of moderating inflation and know the Fed's going to start cutting interest rates. We may not know that until after the summer.
All right, Kevin, great to see you. Thank you
as well,
so
Nicole.
much. Kevin Mahn of Hennian and Walsh Asset Management. Thank you.